I have some bad news about the US economy. Not a joke. Our economy only grew 1.6% even though it was projected to grow 2.4. But worst of all, core inflation rose by 3.7% even though they only expected it to go up by 3.4. This means that the US is not going to cut interest rates anytime in the near future. It also means that this quarter's growth was stagnant even though inflation is high. And that introduces us to the monster of stagflation, where prices are rising, but the economy isn't growing to match it. And that is usually followed by unemployment. And it's not just the US economy that's not doing very well right now. The world economy is heading or inside a recession. And the greatest precipitator of this worldwide recession is China. The Chinese economy is dealing with a $23 trillion local debt bubble, most of that backed by real estate, and it's collapsing. I'm well aware of their projected growth of 4.6%, but anybody can massage data, and we know that China is a non-transparent economy. They are also the world's second largest economy, topping $18 trillion. So if that hurts, the world feels it. China's demand for goods in the West has been diminishing, and their ability to produce goods for the West is doing the same thing. Right now, the Chinese economy is desperate to unload all of what it produced, especially when it comes to electric vehicles. That is bad for all of their competitors like Japan, South Korea, the United States, the EU. They are desperate to sell whatever they can to have as much liquidity to deal with the new wave of bond defaults that are clearly coming for them. The US has already sanctioned countless individuals, and they have been denying China access to semiconductors and other high-tech equipment. Now the US government is preparing to fully sanction China because of their military aid to Russia. China's been doing this quietly for quite some time. I think right now our government is just engaging in protectionist practices. That is going to hurt the US economy, but it is going to crush China to a lower level. What scares me about protectionism is that if it goes too far, it can crush the entire world economy like it did during the Great Depression. But I'm aware that there are many more fail-safes put into place to prevent something like that from happening again, but you should always keep that possibility on your horizon. And right now, this does look like a game of chicken between these two largest economies. But it's clear that China has a lot more to lose than the United States. Because China is desperate to sell their goods, there's only one market that can buy the quantities that they need purchased: the consumer markets of the United States and the European Union, valued at over $29 trillion. Consumer markets of all the BRICS nations do not hold a candle to that of the combined amount of the US and the European Union. If China is cut off from the US market, then the deflation that they're facing now will be nothing compared to what they would actually face. That stands the risk of putting the US into a deep recession, which will easily snowball to the rest of the world. And any countries that were still buying quickly cheapening Chinese goods would no longer be able to do so. The US would recover much quicker from this than China. But I have some positive points to make. For one, this is just the first quarter of the year. A lot can happen over the next 9 months. China will most likely seek a compromise so they can keep selling us their goods. Second, I bet you within 3 to 5 months, most of the conflicts in the Middle East will boil down to a minimum or nil. That will stabilize global trade and also the price of oil. 3, the fact that a huge chunk of the GOP is willing to support the Democrats in aid to Ukraine and other measures shows a more unified front than everyone else thought. Over $60 billion of funding for Ukraine means it gives them an extra edge against Russia. A long string of Ukraine wins against Russia, or kicking Russia out of Ukraine overall, will be a huge boon to the world economy and world trade. Initial jobless claims are still trending down. The same is going on with continued jobless claims. Our exports have increased to an all-time high of $263 billion this month. The Philadelphia Fed Manufacturing Index is at 15.5, well up from the negative territory it was from months ago. I wouldn't be surprised over the next few months if we saw some kind of housing measure which made it easier for Americans to afford homes. Because it's an election year, we are most likely going to see a lot of massaged data to make the economy look a little bit better, which means there would be probably more consumer spending during this time. So even though there is some bad economic news for this week, that is not definitive for the rest of the year. More reports are going to come out tomorrow, and we'll see where it goes from there. My name is the Geo Hussar. I'm going to be interviewing John Allen Woods, the CTO of the Algorand Foundation, about what impact blockchain can have for the rest of the world. It'll be tomorrow at 4 p.m. Dublin time, 11 a.m. Eastern Standard Time, and 8 a.m. Pacific Standard Time. Thanks for watching.